I feel like it's the best of times or the worst of times, depending on your perspective. This is Tyson Ray, financial advisor at Forum Wealth Advisors, where we exist to help make life better for our clients and those in our community. And this is up or down for December as we wrap up 2020. And guess what? Amazingly, for December, the market ended up, and actually for the entire year of 2020, with everything that happened, the COVID crisis, the shutdowns, political turmoil, the election, all of the chaos and all of the gloom and doom and bad news, and the markets ended up. And I know some of you are asking yourselves, how is that possible? And it's possible because we've seen this before. And I want to show you something coming out of two other crises that have happened in my lifetime, 1982 and 2009. This recovery is trending almost exactly like the other two. And actually, I believe that this recovery is probably going to outperform those other two for some very specific reasons, that we're getting all of this stimulus on the back of earnings that aren't all that bad. And in fact, if we look at the earnings layout for this year, they're estimating almost a double-digit pullback in earnings, where businesses are making less money. And yet the projection for 2021 is a full recovery back above where we were in 2019, like 2020 never happened. And then 2022, it advances even more. And what I want to show you is, again, that's just a snapshot of a couple year time frame. If we back up into a much bigger picture of this range of earnings, where earnings grow about 6% a year over time, and the price of those companies that produce those earnings grow about a little over 7% a year, a little bit more over time, this earnings pullback and these averages of the last 2 years and now the next 2 years put together is still within these long-term trend lines. And yet why I think the markets are going to continue to advance is we've gotten record stimulus. And in fact, to help you understand how much stimulus we had, if you get the government stimulated the economy with tax relief and spending at the tune of about $3.5 trillion. And to put that in perspective, they then added $900 billion. So now you're at $4.4 trillion, which is the entire spending of the federal government in 2019. They injected that as a stimulus into 2020. And what I want to tell you is, why do I think things are going to improve and advance into 2021 is because the consumer's balance sheets, the average American's balance sheet, is the best it's ever been. Let me repeat that, because I don't think the good news is getting out there. The average American's balance sheet, the average consuming American citizen's balance sheet, is at an all-time record high as we add 2020, with some of the lowest debt ratios we've ever had relative to income. That is stimulative. And what I want to show you, if you can really look into these numbers a little bit, what I see in these numbers is that there is about a 10% deposit rate of the average consumer's net worth in cash. That's not normally there. And I feel as we get on the other side of the COVID and in the next few months have the vaccine taking care of things, and I think that cash is going to find a home in the economy, in a investment, in a purchase of something, in paying down of debt. Either way, anything outside of sitting in cash earning nothing would be stimulative on top of what the government's given us. And I think some of that cash is that stimulus. And so I am excited about the future. I think our best days are ahead of us. I think that's always been the case since we walked out of a cave. We have been improving ourselves. And yes, there are setbacks. And yes, there are problems. But we come up with solutions to those problems as humans. And our mankind continues to improve because of it. I haven't given up on mankind. I haven't given up on these markets. I haven't given up on capitalism. I have given up on bonds. With interest rates being at record lows, and I mean historic, never seen before record lows, as things get stimulated, as the economy recovers, as they need to take back some of the stimulus, they'll raise rates. And if they start raising rates, and if the long end of that yield curve starts going back up, you will see some price erosion in these bonds like you haven't seen in decades. So with that, I'm excited about the future. If you have questions, if you have concerns, if you don't feel your portfolio is aligned for where you need it to be, let's have a conversation about that. As we look to do our reviews going into 2021, we're going to be making some adjustments as we sit down with you individually as clients to basically help you prepare for what we think we're going to deal with going into the future. But if you have an advisor and you're not a client of ours who doesn't bring perspective that you need to make better decisions, why don't you give us a call? And with that, this is Tyson Ray, financial advisor at Forum Wealth Advisors, where we exist to help make life better for our clients and those in our community.